Hi everyone, welcome. My name is Patrick Prunty. I'm the financial controller here for the Marshall Reddick Real Estate Network. I hope everyone can hear me clearly. Feel free to type into the box and let me know that you can. Anyway, it's nice to see so many of you on the call this evening, especially with the upcoming holiday weekend. I certainly hope you all have something nice planned for you and family and friends. Anyways, as we get started, I'll give you guys a little bit of a background on myself. I've been working here with the network for a little more than 11 years. And with Marshall's recent retirement, I'm now the most senior member of the team. When I say senior, I mean in terms of both years on the job as well as age. I'll be 33 in September, and so it's really a testament to the hungry and youthful, tenacious, and experienced team we've built here at the Marshall Reddick Real Estate Network. Anyways, I've personally bought and sold real estate inside the network. I own several rentals today. And most importantly, when it comes to tonight's topic, I've helped hundreds of members, literally hundreds of members, sell hundreds of properties. Those that have reached out for help here, they want to take a look at their portfolio, run the numbers on each of their properties, evaluate their financial position, determine whether selling a property or multiple properties was the right move for them at the right time. And although we're going over how to sell your rental property tonight, it's really about doing some research, getting prepared, making a decision, and staying proactive. Generally, the inquiries we receive here at the network are in regard to sale of rental property previously purchased through the network. And this presentation is somewhat geared in that direction. However, keep in mind, even if you didn't purchase the property through the network, we welcome your call. Also, know that MRREN, the network that is alive and well here in California. So what I want you to understand is that, we do work with excellent brokers here in the state and other real estate professionals. So if you're contemplating the sale of a primary, don't hesitate to give us a call. All right, so are we considering selling? Consider the network a trusted and experienced friend who's willing to listen, understand the situation, and provide an opinion as to the best plan of attack. With that said, my goal today is for each of you to obtain a better understanding about the factors you need to consider, how to get started, how to make the process of selling the property simple and effective, and the benefits of working with and contacting the Marshall Reddick Real Estate Network for help. For most of us, when you bought property, you probably weren't thinking about the point at when you want to sell or when that time would come. I know I certainly didn't think about it. It was probably 3 or 4 purchases in, and I realized that life progresses, things change, an opportunity arises where you need to sell, you have the desire to sell, or perhaps you're just curious at what your property would sell for. So, before you get started, you've got to ask yourself a few questions. Let's start with the original purchase details. What year did you purchase the property? How long has it been? Time's flying by so quickly, I can't believe that I bought my first property 10 years ago. What was the original purchase price? I scratched my head when I was thinking about it. I couldn't remember. And how much did you put down? Let's think about, how much you've invested into the property. Also, ask yourself these questions. How many loans do I have on the property? What's the current balance on each loan? Do I have a first? Do I have a second? What are the terms of those loans? Get out your mortgage statements. Even better, get out your loan documents, your HUD, your promissory note, your amortization schedule. How long has it been since you've looked at these documents? Do you even know where they are? I had to go drum them up out of storage. anyways, give these documents a good analysis. You know, if you've got a 30-year fixed, or maybe you've got some type of interest only or adjustable. Did it recently reset? Did you experience payment shock? Will it reset in the near future? The point here is that you cannot even think about selling your rental property unless you're informed as to the original purchase details, the type of loans you have, and the amount you currently owe. If you come to the network and you're interested in selling, the first thing that we're going to do is we're going to put this questionnaire in front of you. We're going to try to really understand your situation and what's going on with the property. And we're also going to want to make you think about it. So don't need to write these down. We'd be glad to send you this PowerPoint or this questionnaire if you'd like. But you can take a look at some of these questions. They're pretty detailed, but you should know these. Things like, why do you want to sell the property? How motivated are you? You know, the types of loans that you have. Is there a homeowners association? You know, are you willing to short sell? Do you know what a short sale is? Who's your property manager? Is it tenant occupied? Sorry about that. And if you're already working with a broker or not. Next, let's move on to what's your property worth today? Do you have an opinion of value? I mean, how realistic is that opinion? How did you formulate that opinion? I imagine most of us, I mean, I know I use Zillow, Trulia, Redfin, all of these internet sites that are out there on a daily basis. But are they accurate? Have you taken into consideration when you formulated your opinion of value? Did you take into consideration the condition of the property? What about the local market conditions? You know, I'm sure your home probably needs some maintenance. It's got some maintenance issues. Are the homes selling in your greater metro market? What about in your neighborhood? What about down on your street? You know, it's very hyper-local, so you can't always rely on these internet websites that we often find ourselves. So it's good to start with these websites, but ultimately, if you're truly serious about selling, you need to consult with a local market professional, a knowledgeable broker, to get an understanding, like I said, of the metro, the county, the city, the neighborhood, the street, and ultimately the property. You need to know if properties are moving in the area, at what speed, at what price point. You know, are they traditional, equity sales, or are they distressed sales? All of these aspects play into the various pieces of the puzzle and go into the valuation of your property. You've got to know what your property is currently worth today. Now, let's hear a little word from one of our regional representatives on this topic.
Hi, my name is Jim Moody, owner and founder of Flex Realty. You know, a question that's most often asked of me is, gee, Jim, why is the value you assign to my property completely different from the value that Trulia and Zillow and a host of other real estate sites have given? Well, the answer is simple. Nobody and no internet site can give you an accurate value like a trained local professional can. Think about it. Sites like Zillow and Trulia, they aggregate all kinds of information. They don't take into account that a transaction might have been a distressed property, a short sale, a sale between a parent and a child, or vice versa, or an inter-family or inter-business transaction where the value has been kept artificially low. Or if some shenanigans occurred with the sale, that the sale actually occurred much higher than what the true market value is. You'll never get that with an internet provider because they cannot filter out the information that you see. Only the information gathered by a licensed appraiser or a licensed real estate agent can be considered the most accurate when it comes to placing a value on the real estate you're looking to purchase or to sell. For tips like this, please feel free to go to our website, www.flexrealty.com.
Awesome. Thanks, Jim. Well, that actually wasn't him live. That was a recording that you can grab from YouTube. But it's very important to understand that exactly what he said is exactly the truth. Use those websites to get started, but when you're ready to really move forward, you need to talk to a local professional. So, how do you find the right broker? Pop quiz. So A, ask your property manager. B, search Google. C, ask your tenant. Or D, call Marshall Reddick Real Estate Network. Anybody have the answer to that? Want to type it in for me? You guessed it. Call the Marshall Reddick Real Estate Network. You know, we work with brokers all around the country. We've got a bead on the markets, and why wouldn't you call us? It's free advice. Let's get started. So, once you called, we've reached out, and now we're looking to really establish that opinion of value. A broker's price opinion, commonly called a BPO, many of you may be familiar with that. This is a good place to start. If you're looking for a sight unseen ballpark figure of value from that local professional, after a quick peek of the internet, I generally start with the BPO. I always ask for a range of values. I start with the fire sale price. This is an ultra-aggressive price at which the property will move extremely quickly. The middle price is the suggested list price, the average, the middle of the road. As long as your property shows decently, that's the middle of the road price. And then, of course, we got top dollar. Your property is the best-looking property on the block, inside and out. So that's kind of the range that I always ask my local professional, my broker, for when I get that BPO. If you want to get a little bit more detailed, then we're going to move to the comparative market analysis. Short is CMA. So again, this is much more detailed. This would include a visit to the property, pictures of the property, recent comparable sales in the neighborhood. And again, what kind of sales are those? Are those equity sales, traditional type, or are they distressed? Is it short sale, foreclosure? A good broker, a professional, will be able to provide this at no cost and be happy to do it. At this point, you know, are you ready to compare what do you owe versus your market value? Do a little mathematics? Well, it's a very common mistake, and I hear it all the time. Hey, Patrick, I've got equity. I owe $105,000, and my home is worth $110,000. Let's sell. Well, don't forget, you have to consider that there are costs to sell your property. So earlier this week, when putting this together, I took a sampling of about 25 sales recently that occurred through the network. And I wanted to get a good idea about the settlement costs. And in doing so, I came up with these numbers. So again, we've got settlement charges. First and foremost, number one big item is going to be the sales commission. You've got to pay the realtor. So generally that's 6% right off the top. Although that's negotiable, we're seeing that come down in some markets. And then we've also got title charges, title insurance. We've got government transfer recording fees. So estimate the settlement charges, guys, to be about 7 or 8% of the sales price. Also, don't forget, you've got pro rata property taxes. The taxing authorities in a lot of these areas where you've bought property, they pay them in arrears. So you may not pay your 2013 taxes until 2014. So if you sell in May, for example, of 2014, you may have to pay all of 2013's taxes if they haven't been paid yet. Also expect seller-paid closing costs. If you want to make your property shine and stand out and get the best and top dollar for it, you may have to cover some of the buyer's closing costs. There may be some additional charges. But on this front, we're looking at about 1 to 3% of the sales price. Total, guys, I would suggest that we're looking at 8 to 10% in total sales costs. Okay, now at this point, now we're ready to move forward. We're ready to do that analysis. How much you currently owe versus your current market value. Do you have equity, or are you underwater? Let's talk a little bit example of an equity position here. So simple math. We've talked to our broker. We've had the broker's price opinion. We've had the CMA. We're very comfortable with that middle value, that current market value of $147.5. Let's take into consideration the sales costs. We're going to use that 9% figure. So we're looking at total cost to get out of the deal about $13,275. Our loan balance, after taking a look and doing some analysis, we're at $105,000 currently, and let's say in this particular situation we only had one loan. So $147 less your sales cost, less your loan balance, you've got equity. You're in a good position in this property. Concurrently, on the other hand, let's look at an underwater or a distressed position. So we've established our current market value at $128,000 on this particular deal. Sales cost, again, we're going to use 9%, so we're looking at $11,520, and a loan balance of $121. So this kind of goes back to the situation that I hear all the time. People don't really factor in that sales cost, and they just look at the market value and the loan balance, and they want to be able to get out, or they think that they have equity. But again, in this situation, now you're in a distressed position. You're underwater. So what does that mean exactly? Well, this means that you're either going to come to the table with dollars to close the deal, come out of pocket, which that doesn't sound real good, or you're going to be looking at loss mitigation alternatives. We'll get a look to the details of what loss mitigation means and what those alternatives would be as we progress throughout the presentation. I'd like to take a minute here and pause and debunk some of the myths, and I hear these a lot, and it's very important that you guys understand. So real estate brokers are magicians with magic wands, and that's just simply not true. In some cases, you might think they are because we do work with some of the best, but it's important to know that they are human beings just like us. So common question we get, I want to sell my property for top dollar, and I don't want to disturb my tenant. Now, it can be done, guys. Is it likely? Are you going to be successful? Extremely unlikely that you're going to be successful when you try to sell your property with the tenant in place. And guys, guess what? It's just not advisable. Like I said, it can be done, but tenants don't want to show the property. They often don't want to cooperate. They won't answer phone calls. They don't, the property's not in a good shape when your broker comes by to see it. If you do want to make an attempt to sell a property with a tenant in there, you've got to be creative. Think about an incentive, perhaps, that you can offer. Commonly, when I have seen this done, we offer a reduced rental rate to the tenant, maybe a quarter or half off rent during the time period when we're going through this transaction. I mean, just think about it. You're asking them to open up their home and show it to a potential buyer. That's extremely uneasy for that tenant. You could also think of other alternatives. Buy them a flat screen TV for a couple $100 for their cooperation. I think that's highly worth it. Generally, though, understand that having a tenant in place is going to have a negative impact on your ability to sell. Furthermore, understand that it restricts the pool of buyers that you're marketing to. If you've got a tenant in your home and that tenant's going to stay, you can only sell to an investor. And guys, investors drive the hardest bargains. If you really want top dollar, you're going to need to open up that buyer pool to owner occupants. Here's the next myth that I want to debunk. MRREN, the network, has a list of investors who want to buy my property. And furthermore, they want to buy it for top dollar. So although that this does happen from time to time, and although we do have a number of investors looking to scoop up property, as with any sale, it depends on a lot of factors: the location, the condition of the property, the terms of the sale. How much are you willing to sell it for? If you're in a serious equity position here, and maybe you've got own the property free and clear. Now that would be a situation where you could do some seller financing. That's a situation where I've seen it work with a sale between network member to network member. In that case, we'd help you facilitate that for sale by owner situation. But again, guys, remember, investors drive the hardest bargain. They want to steal a deal. They're out there looking for the foreclosures, the short sales, the under market value. And you want top dollar for your property, no doubt. When everyone sells, that's what they want. Unless, of course, they're underwater in a distressed position and they frankly don't really care. Okay, so let's jump back on. We've done the analysis. We are in the equity position. What is next? So, consider the following, guys. Do you have a tenant? Most of you probably do. We briefly talked about this above. So, many times I've seen owners get extremely frustrated on this point when they're trying to sell. How do you deal with this? What's my suggestion? All right, well, I suggest that you time your listing on your sale, your outlook of selling with the expiration of a lease. Most people are getting a 12-month lease on their property. About 6 months in advance of that, if you're thinking of selling, you need to be kind of getting your ducks in a row. And at that point, pricing becomes extremely important. You want to, most people, they want to squeeze every little bit out of the sale, so they want to hold out for that top dollar price. And what can happen, and again, this is frustrating to many owners, is they've alerted their tenant they're going to be selling the property maybe 3 months before that lease is up. They get the property on the MLS, but they've got it at that top dollar price. They're not getting much activity. The tenant moves out, and then you end up covering a few monthly mortgage payments with no rent. That's never a good thing. So what I suggest is that instead you aggressively price the home. And of course, your broker will be sharing information with you on this, and you're welcome, of course, through the whole process, and we encourage you to kind of bounce those ideas off of us here at the network. But again, make sure you take that tenant issue head on. Also, do you have any make-ready costs? You want to talk to your broker about this. You're going to want to talk to us about this. You're not going to really want to put a lot of money into that rental property. You've got to look at this differently than perhaps most of you who have sold property that maybe was a primary residence. Also, will you have a gain? Let's talk about, in the equity position, what are you going to do after you sell that property? Do you have a gain? Contact your CPA. If you don't have a CPA, we have experts. Give us a call. We'd love to connect you with somebody. If you don't, your CPA should be able to tell you based on the hypothetical price point at which you're going to sell and how many years you've had the property, calculating depreciation recapture, and what is your gain. Okay, now commonly people say, well, I'm selling the property for less than I owe or less than I purchased for the property, so I don't have a gain. Well, that's not true. I personally am evaluating the sale of one of my properties, and I'm selling it for less than I originally purchased it for. But all in said, I've had the property for 10 years, and with the depreciation recapture, I still have a gain. But in any case, find out if you do or not. And if you do have one, consider a 1031 exchange. You might be beneficial for you to defer some tax and jump into the next property. If you're going to do that, I suggest giving us a ring. We work with Kathy Buenga of Asset Preservation. She's a 1031 exchange accommodator, and you're definitely going to want to contact the accommodator before moving forward with the sale. They need to be involved on the front end of the property that you're going to sell. And if you're not going to 1031 exchange, what do you plan to do with the proceeds? Consider these when moving forward. Conversely, let's jump to the other hand. I'm underwater. We went over that example. In this situation, what's next? So we've established you're in a distressed position. Don't panic. Millions of people are in or have been in this position in the country, especially over the last couple of years with this downturn that we've had. Although the market's bounced back, a lot of you are still underwater. Understand that the bank's not going to come knocking on your door, guys. Plus, you're going to be smart about this, and you're going to deal with the situation head on. Consider these factors. How far underwater is the property? Do you have negative cash flow? Or is it positive, perhaps? Consider the market that you're in. How fast will it recover? How long will it be, how many years before it appreciates enough to cover your loan? Or on the other hand, how many years or more months do you have to go to pay that loan down? Hopefully you've got a 30-year fixed. If you have an interest only, this won't help. But how many more months before you pay that loan down enough where you get to equal market value. So you're in a position to sell and not be underwater. Consider these factors, guys, as you may opt at this point to say, I'm just going to hold the property and go for better days. However, you may say, geez, I'm extremely underwater. It's a negative cash flow, and I just don't think that my market's going to recover. We've had strong appreciation nationwide over the last couple of years, and if you're not back, like a lot of areas in Florida, or like for myself, some areas that I own in South Carolina, you might just have to say, how important is my credit? And why am I asking that? Well, now we're on to the ideas of the loss mitigation that we previously talked about. So you do have options if you're underwater. There's a short sale, there's a deed in lieu, and there's a loan modification. Not sure if you guys have heard of those, but briefly, short sale is basically your property's worth less than the amount that you owe, or excuse me, you owe more than your property is worth, and you're going to have the bank accept the loss, and you're going to end up selling the property and not having to come out of pocket with cash at closing. A deed in lieu, on the other hand, is a deed in lieu of foreclosure. You basically get the bank to agree to take that property back, and you deed it back to them in lieu of having them move forward on a foreclosure. And then let's talk about a loan modification. A lot of people have asked about this, and frankly, guys, loan modifications are not happening on investment properties. They're hard enough with a primary residence, but very, very rarely. I have seen it done, but loan modifications are not happening. Furthermore, if you ask those questions to yourself before, if you're underwater, the negative cash flow, is a loan modification really going to help you? And do you really want to keep this property? So anyways, when we're talking loss mitigation, again, we've got people that can help. Linda Robinson of Sapphire Realty is who you need to talk to. She's a network member. She had 10 or so properties of her own that she purchased in Florida that were extremely underwater, and she worked her way through all of these different loss mitigation situations. She's a pro. She came on with us maybe 5-6 years ago, and she really is a gem. She literally has 100% ratio of success. And how does she do that? Well, I mean, she'll give you a free consultation if you're interested. She'll discuss your options and help you understand your situation a little bit better. She's honest, and she won't take on a client based on your situation unless she feels that she and the deal can be successful with a short sale or a deed in lieu. So I just wanted to bring to your attention, guys, if that would be more helpful for you. We do have an upcoming webinar very similar to this, but led by Linda Robinson, and is directed on solutions to help you avoid foreclosure. That's going to be July 23rd at 6:30. Anyways, last point on this slide, foreclosure is not an option, you guys. There's never a reason to let that happen. The banks are willing to work with you a little bit more these days. I'm not saying they're great, but a foreclosure will only happen if you, what I like to say, is put your head in the sand and just ignore the barrage of paperwork that you're going to get if you're not making your payments. And you don't want to go this route because this leaves the door open for a default judgment. And that is the only thing you don't want. We very rarely see it happen, but I have seen it happen where somebody just didn't take care of business, they didn't look at these loss mitigation alternatives, and they let their property go through foreclosure, and then guess what? Years later, the bank reared its ugly head and came after that previous homeowner for the deficiency balance. Now, real quick, the deficiency balance is the amount left between what you owed on your loan at the time of foreclosure versus what the bank received from that foreclosure sale. Okay, you've decided to sell. You've come this far. You've evaluated all the different options. What do? Well, you've got to, if you haven't already, which you might have, but you've got to alert and talk with your property manager. This is extremely, extremely important. They're going to be in addition to your broker, your boots on the ground. They probably have the keys to your property. I mean, I certainly don't have keys to any of my properties that are out of state. So if you haven't already talked to them, get in touch with your property manager and bring them up to speed. Then let's check with the tenant. Find out if they can or want to buy the property. This has been a really, really good creative alternative that I've seen work well of late. But make sure you check your management agreement with your property manager, that is. I've seen a lot of management agreements that have a caveat in there about if you sell to a tenant that's been placed by your property manager that you owe them a commission. So if you guys want, you're welcome to, when you contact us, to send us over a copy of your management agreement, and we take a look at that for you, help you understand it a little bit better. If you don't have your management agreement, then give your property manager a call and ask them to send it over. They certainly should have a copy. And again, let's talk about being creative. If you do have that equity, can you carry back a note? I mean, that would be a very good way for you to sell your property, make it attractive, perhaps get the tenant to buy the property, and you end up now having a stream of income over the life of that loan. Next, let's get in touch back, keep that broker that's done all of this work for you so far in getting you that BPO, getting you that CMA, being the boots on the ground. Let's enter into a listing agreement. Now, the key things in a listing agreement you're going to want to look at and decide upon are the list price. Again, we want to be aggressively pricing these homes. I'm not suggesting give it away or not get what the value is, but you certainly don't want to hold out for top dollar. I attribute this to how I look at renting my properties. I always price my properties for rent slightly under market value. I'd rather have, a few dollars less per month than a few months with a mortgage payment and no tenant. So same issue here. Your tenant's most likely going to be moving out, and a couple of months of mortgage payments with holding out for that high list price, that's going to reduce basically your proceeds of sale each month that goes by. Next important topic is the list term. Most brokers are going to want you to maybe get in for 6 months or a year. That's ultimately your option about how you'd like to structure that. But you don't want it to be too short. You want your broker to be working hard for you. And if you only have it for a 3-month period, maybe that's not long enough. And then, of course, the commission. That's going to be in the listing agreement. Now, you may work a little bit with the broker that's acting on behalf of you, the selling broker, but you certainly don't want to try to skimp on the co-broke or the commission that's going to go to the buyer's agent, because the buyer's agents are out there looking at the MLS and they see what the commission is to them. So they are very well likely to steer their client, their buyer, to deals that offer them the highest commission. I don't know if necessarily that's ethical, but guess what? It definitely happens. So at least make sure there's a full 3% going to a potential buyer's agent. Now, let's discuss the plan of attack with your broker. So again, don't overprice the property. We talked a little bit about that. It's better to aggressively price the home, generate immediate activity. If a month goes by when you're on the MLS and you don't have any activity, certainly something's wrong. Remember, if you have those mortgage payments that are going by each month, that's reducing your proceeds of sale in essence. And don't spend a lot of money on fix-up costs. Listen to your broker, perhaps some carpet, some paint, but most likely you're going to be compensating a potential buyer in the form of seller-paid closing costs. We talked about that before, but make your property attractive, offer some closing costs. It's also, again, remember, you're looking at this rental property much different than selling a primary. You're not going to be staging the property. You basically want to get market value and get out. Now, extremely important here, guys, stay proactive. We're all busy. We've got jobs. We've got kids. We've got family. But you just got to hold yourself accountable and hold your broker accountable. Have regular conversations. Every 2 weeks at most. Maybe on the front end, when you first get your property listed, maybe you want to give it a full 30 days. But really, if you've got your property priced correctly, you should have activity before that. But if you don't have any, then every 2 weeks you should be talking to your broker. What can we do? What's holding up here? How can I attract more buyers? Try some different things. So now's when your broker's really going to earn their commission. I mean, literally up all the way to this point, all the way to the listing agreement to getting it on there. They've done all this work for no dollars. And they may not even get your property sold. They may get nothing out of the deal. But anyways, this is extremely important. This is when now they're going to really take over, especially in a rental property situation. You're now basically going to be sitting back. You've done all of your work. You've done the analysis. You're moving forward, and your broker will be earning their commission at this point. They'll be doing the heavy lifting. They're going to receive, negotiate, and accept an offer. So I like this little picture that we've got here. It's like touche. You know, your broker will be going to bat for you and negotiating the terms and getting you the best deal, the best offer that they finally can. They're going to confirm the buyer's qualifications. Are they pre-qualified? Are they paying cash? Are they using financing? They're going to negotiate those terms. Out of this, you're not going to worry about it too much. Let the broker handle these details. Next, you're going to be looking at signing the paperwork and cooperating. Okay, you're going to have a home inspector. You're going to have an appraiser coming in. You're going to have all these different things. Again, let the broker handle all of this. You know, if you want to be involved, great. Let them know to keep you in the loop. But honestly, I'm going to let them handle this. You might want to keep us in the loop as this is going too. Again, we've got some leverage with those brokers. If they're not being proactive or getting back to you in a timely fashion, you certainly need to let us know. Finally, we're going to get to the close. And for those of you with equity, you've got decisions to make. Although we're here at the end and you're excited, did you enter into a 1031 exchange? You've got decisions to make. If you didn't and you were just going to take that cash, where are you going to be investing it now? On the other hand, if you're underwater, breathe a sigh of relief. You've gotten through the short sale process. You've gotten through the deed in lieu process. We knew you could do it. We told you could do it. So now let's talk about a little bit about the benefits of working with the Marshall Reddick Real Estate Network. So again, free advice, guys. Talk it over with someone who's knowledgeable. You get access to our trusted brokers all around the country. Again, we're not in all the markets that we were before, but we do keep all of those contacts fresh. We're always on the phones with them. We're trying to find out what the situation is. When you guys call us, we get right on the phone for them. It's certainly better than the other options on our pop quiz, which are asking your property manager. A lot of you maybe aren't happy with your property manager. You certainly want to use them and pay them a commission to list your property. And searching Google, I mean, you're just going to pick up the phone and make a couple interviews. It's certainly better to go off of a referral, in my opinion. Again, we also have that leverage. You know, they want to work hard because they know you're a referral of the network. So use that broker and use our leverage. Furthermore, we've got access to other recommended real estate professionals. We talked about the CPA and calculating a gain. You know, give us a call. We can get you in touch with those if you don't already have that. 1031 exchange accommodator. Again, this is going to be important if you're in an equity position. What are you going to do with that equity? You've got to have that accommodator involved from the get-go, from the listing of the property you're going to be selling through the closing. Those funds need to go to the 1031 exchange accommodator. If they come to you post-closing, the deal's dead, and the 1031 will not work. And again, if you're on the underwater and distress side, we've got the loss mitigation specialist to help you. What about reinvestment options? So this is again on the equity side. You know, we've got a beat on the markets in which you should be investing today. So if you're executing that 1031 exchange, you know, let's be proactive. Let's get you in touch with those new guys. Do you want to be in Austin today? Do you want to be in Phoenix? Maybe Memphis is right for you. Perhaps some places in South Florida that are really coming back strong. Otherwise, for those of you who said, you know, I'm not doing the 1031 exchange, but I still love real estate, but I'm just tired of the maintenance, the vacancy, and the property management that goes into actually owning the rental property, well, we've got some alternatives for you. We've got a program for short-term private money lending. This is first trust deed investing, if you will, all short-term, 12 months or less. We also have created a fund that buys distressed mortgage paper where you can invest directly in that fund and have a 100% completely passive income with us doing all of the heavy lifting. Again, if you're executing on a sale of a real property and you want to look at the investment options, we can definitely help you. So at this point, are you working with one of our real estate advisors already? If you are, we welcome you to contact them directly. We've got our lovely Tanya Lorimore, David Kling, and Khalid Travusi. David Kling is one of our most recent real estate advisors. He hasn't been working with us that long, about 7 months, and he just got promoted, so I wanted to congratulate him. Way to go, Dave. That hard work's really paying off. And Khalid, he's our brand new real estate advisor. He comes with a lot of experience, been 10 years in the loan industry. So again, if you're already working with one of these, I encourage you to contact them to get started and get going on the sale of your rental properties. Otherwise, if not, or you prefer to contact me directly, like I said, I've helped hundreds of members, that have called. They want to talk about their property. They want to look at their situation. You're welcome to contact me directly. I'd be happy to get on the phone, connect you with who you need, go over the situation. And, with that said, even if you're a distressed seller, we've seen it all. Don't hesitate to give us a call. Whatever the situation may be, chances are we've seen it, we've got the experience, and we can help you. On that front, don't wait until it's too late. At this point, as we always do with our webinars, I'm going to open up the floor to some questions. I'm sure there's a lot of them, and there's a lot of different things that go into selling your rental property, whether it may be a single family, which is mostly what we have, or multi-units and things of that nature. So if you have some specifics, I'd open it up now. We got a couple of good questions coming in here. Who is our broker in Phoenix, Arizona? So we work with AZ Equity Properties, and Tanya Nord is the contact there. We also work with Chris Bennett of Bennett Real Estate. We've got a couple of contacts there. It just really depends on the type of property. Another question coming in here about will a bank accept a short sale or a deed in lieu if I have funds in the bank to pay off the underwater portion of the loan? Extremely good question. You're going to want to structure your books, your bank accounts, and things, certainly. But it can be done. We would need to get on the phone and have a consultation with Linda Robinson. But certainly, banks are more willing to look at loan modification, or excuse me, not loan modification, but loss mitigation alternatives. So definitely, don't worry about if you have cash in the bank. We can always come up with, and in essence, fabricate a hardship. That's the key to deed in lieu and short sale is, do you have a hardship that you need to sell for? I got another question here. A condo in LA County could sell to another investor or principal residence. Should we do a little upgrading? I'm not quite sure I understand that question. If you want to retype and clarify that for me, I'd appreciate it. How long is the 1031 exchange good for? Okay, well, again, I'm not sure I quite understand that question, but a 1031 exchange, when you effectively sell the property, at closing, the proceeds will go to the accommodator, and you are now on the clock. You have 45 days from that closing to identify the properties that you will be buying with those proceeds. And then you have another, 135 days from the 45 to close. The total timeline for a 1031 exchange is 180 days. Another question about the broker in Memphis, Tennessee. Again, we've got a couple there. We work most closely with Enterprise Realtors. They've been with us since the get-go. Again, I've been here for 11 years, and Ryan Tucker and his team out there were here before I started. So again, if you guys want to give me a call or talk with your advisor, we can get you in touch with those particular people. Okay, good question. John Krenya, my friend. Can you 1031 a rental house into the value-add mortgage fund? That is definitely a no. You've got to go like for like property, so you definitely have to exchange into real estate. Doesn't have to necessarily be one property, could be multiple properties, but the fund is not a rental property. It's an LLC basically that you would be investing into. Got another question about, and I'm getting quite a few actually about who the brokers are in certain areas. So I'd like to take those calls directly, not on the webinar, but feel free to shoot us an email, give us a call. We will definitely get you in touch with the brokers that we work with in certain areas. Question here, you said not to spend money on fixing up the property, but if someone is interested in living in the condo instead of an investment, we could, if we upgrade, wouldn't that be more appealing to that person? Yeah, well, I mean, definitely fixing up the property is a good thing, but you got to take the emotion out of rental properties. That's not easy for a lot of us to do. I know certainly not for myself, but it's much different than a primary residence that you're really going to spruce up and it was your home. Rental properties, owning rental property, it's a business. It's an investment. So, don't go overboard. Maybe a few things, like I said, carpet and paint, but in general, if someone's coming in, they're going to be, even if they're an owner-occupant, they're going to want to do things on their own. Maybe they're going to want to fix it up, and they'd probably like to get into the property a little bit easier. So compensating them in the form of closing costs, in my opinion, is a little bit better than actually putting money into fixing up the property. All right. Guys, I'm not sure if we have any other questions for this evening, but I definitely want to thank all of you for being here. We really appreciate everyone's business, and we look forward to working with you. So again, thanks so much for being a part of the call, and we look forward to helping you sell your rental property. Thanks so much. Have a great 4th of July weekend, and we'll talk with you soon.